So, dental practice owners, do you pay your kids? Do you hire them in your practice? Did you know that you could actually take a deduction if you hired your kids to do some jobs at the office? Did you know maybe if you dream a little bit that you can make them multimillionaires? If you didn't, watch the video, see how it may be done, and maybe dream a little bit with me. All right, let's get into it. So let's talk about hiring your kids in your dental practice. Okay, so there are certain rules you need to follow. You need to pay them a certain way. Let's go through rules that the IRS has. Okay, so look at my screen right here. It tells you that the tax code allows you to hire your kids inside your dental practice if they're doing legitimate work. Okay, if they're doing legitimate work, you can pay them a reasonable wage for the jobs that they do, okay, and for the number of hours that they work, or by project basis. If the child is less than 18 years of age, then what happens is you don't even have to pay the pesky Social Security and Medicare taxes on their wages. This is only if you are not an S corp. If you become an S corp, then the game changes a little bit. Then you do have to pay the Social Security and Medicare taxes. The next thing is the amount you pay them, okay, is tax deductible for your practice. So if you're at about 37% tax bracket, and if you pay them about $6,500, that is a saving of about $2,400 from a tax standpoint. Now keep in mind, you didn't pay any tax on that $6,500, and your kid will not have to pay tax on that either if they are below the standard deduction. Okay. If you pay them up to $15,000 in 2025, which is the standard deduction for an individual in 2025, they don't have to pay tax at all on that on that income. It's tax free completely. Now, here's where the powerful move comes in. What you do is the amount you pay them, you put that amount in a Roth IRA. Okay. Now, it goes in the Roth IRA and it sits there and you invest that money. Okay. You can use this for many things, including college. However, dream a little bit with me and see what happens to that $6,500 if you leave it in the Roth IRA and don't do anything with it. Okay. Now, there are rules what you need to do from the IRS standpoint. So let's talk about that as well, because you don't want to run afoul with the IRS while paying your kids. Okay. Here are the requirements to take the deduction. Children should only be paid for legitimate work done for the business. Okay, so you need to make sure your kids are doing something for the business. They can be cleaning the office, they can be coming and working as part of the reception, cleaning up the clutter in the front office, shredding paper, and so on and so forth. But they need to be doing something for the office. They can also be on videos for your practice, or just find a job is what I'm saying. You know your kid better than I do. You just need to find something that interests them and something they can do legitimately for the business. Okay. Number two, you need to document what job descriptions they're going to have. And if they're going to have multiple jobs, just put in there, hey, here are all the things that my kid's going to do for the practice. Then you also need to document the hours that they work or the projects that they have done so that you can pay them based on that. Run them through payroll. So anytime you pay them, you have to have them go through payroll like any other employee, just like how you pay your assistants, just like how you pay your hygienist. Run them through your payroll service. Okay. Next thing is, each child needs to have their own bank account. You can't run them through payroll and deposit the money in your personal bank account or your wife's bank account. The kid needs to have their own bank account. So you need to make sure you do that. last but not the least, children should be paid at a rate that you would pay a related party at. Okay, so if you want to hire your child and pay them $6,000 for coming and taking a picture at the office so that you can put it in the office, that's probably not going to fly. If you want to do that, I have a son. He's pretty. I'll send him over. You can take his picture, and you can pay him $6,000. But that's typically just not going to work if it's a related party. So be careful about that. You have to pay them a reasonable rate for the job they're doing. Okay. Now, sometimes you can pay your kids more for specific jobs, but you just have to document why are you allowed to pay more and what's the reason you are going to pay your child more than anybody else on the market. Okay. So just keep that in mind. Here are a few things that your kids could do at your practice. Now, this is not a all-inclusive list. This is just a list that I've come up with. Again, you know your child better than anybody else. You know your practice better than anybody else. You just have to find, hey, what can your child do at your practice and have them come together. Okay. So, I mean, simple things like greeting patients. They can just when patients come to the office, they can greet them, and they can, what mostly the front desk person does is gives the patient an iPad. Your kid could do that too, especially if they're 10 or 11. They're trained enough to do that part, so they can do that. If they're a little bit younger, they can be shredding paper. If they're a little bit older and you think they can handle social media, they probably could do that. And when they start to handle social media or managing posts and stuff like that, you could probably pay them a lot more than, the normal wage, because social media people earn a lot of money. So if your kid's able to do that and does that in a proficient manner, hey, you can pay them more. They can clean outside, they can clean the office, restock the office supplies, etc. Straighten out the waiting room, pick up all the knickknacks that patients leave behind. They could all do all that stuff. If you make educational videos for your patients, they can be in those videos. And if they, speak some, dental terminology, you could pay them more because they're a little bit more skilled than other kids on the market. Okay, so there are a bunch of jobs that they could do at your office. Again, they need to be paid for legitimate work. Okay, that's the main thing. Key thing to ask yourself the question, if you'd pay a third party the same amount of compensation for the same amount of work, considering their skill, experience, and notoriety. Essentially, treat your children like any other employee you would hire for the tasks. Okay, so that's the main thing. So, at the end of the day, you have to figure out a way to make this thing work so that you can pay your kids, wages during the year. What that does is it takes the income from the highest tax bracket that you are at to your child's tax rate. And typically, if they don't have any other job, they're basically paying no tax whatsoever. So that's the beauty of this. So you get a tax deduction. Now, that is just a start for this. This is where the dream begins. Okay. Now, we were talking about the Roth IRA. So let me show you something. Before we go any further, let me introduce myself. Hi, my name is DJ Bola. I'm a CPA in Texas providing bookkeeping services to dental practices all over the US. On this channel, we discuss how to increase profits, decrease taxes, and stay compliant with the IRS for dental practices. So, subscribe. Now, let's get into it once again. So, let's say your child starts to work for your dental practice at the age of 8. Okay, for some reason you are able to hire them and you figured out a way to have them work at the practice and you're able to pay them $6,500. If you're able to pay them $6,500, you can contribute $6,500 to their Roth IRA for 2025. So what happens in this case is you contribute $6,500. Now each year this changes, but for simplicity's sake, we're just going to leave it at $6,500 for the rest of the video. So let's say you are able to do $6,500 for this year, $6,500 for the next year, and so on and so forth for the next 11 years. Okay, that means overall you have contributed about $71,000 to their IRA. Now, every year you contribute that to their account, you get a deduction of $6,500. Each year you make that contribution, you get a deduction. Your taxes go down by $2,400. Overall, if you did this for 11 years at the 37% tax bracket, your taxes go down by $26,000. But that's just the start. Okay. Now imagine this: if you did this for 11 years and invested this money in the Roth IRA, and you got about 8%, rate of return, that means this $6,500 is growing by 8% each year. And any subsequent dollars that you've invested in there and contributed in there earn 8% year over year. At the end, if your kids leave it in there till they retire at the age of 65, they have about $4.35 million. Okay, and nobody paid taxes on that. You didn't, your kids didn't, and they have a nice nest egg to retire on. And this is with just the 11 $6,500 contributions that you have made to them from the age of 8 till 18. They do not need to contribute to this at all. Now, I am no investment advisor, okay? So consult with your investment advisor about this. But I do know how to run Excel, so there are the numbers. What do you think about it? Hey, if you would like this Excel file and the rules in that PDF file, there's a link in the show notes. Go ahead and click that, and we will send and provide your email address, and we will email this stuff to you. If you would like more tips like these in the future, please subscribe to our channel. Thank you for watching.